Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hartford Insurance Group INC quarterly report. The Hartford Insurance Group offers a wide range of insurance and financial services to individual and business customers across the United States, UK, and internationally. Its key businesses include business insurance, workers' compensation, property, automobile, liability, umbrella, fidelity and surety, marine, livestock, accident, health and reinsurance, personal insurance. Automobile, homeowners, personal umbrella, coverages property and casualty, other operations. Asbestos and environmental exposures, coverage employee benefits. Group life, disability, and other group coverages to employer groups and associations. Hartford funds, managed mutual funds, and exchange-traded funds through various distribution channels. The Hartford Insurance Group Inc. HIG stock price has increased by approximately 15.65% over the past year due to several key factors. The company's strong Q3 2025 earnings, with EPS of $3.78 and revenue of $5.11 billion, beating consensus estimates, contributed significantly to this growth. Additionally, Hartford Insurance Group delivered an EPS growth of 17.6%, with its net profit margin strengthening from 11.5% to 12.7%. The company's growth in business insurance and net investment income also played a crucial role, with the business insurance segment showing a 9% growth in written premiums and the property and casualty segment's net investment income increasing by 16.8%. Furthermore, Hartford Financial's shareholder capital return strategy, including sustained share buybacks and increased dividend distribution per share, has been impressive. Analysts' positive sentiment and valuation, with an average price target of $140.07 and a lower-than-average price-to-earnings ratio, also suggest that the stock is undervalued and poised for further growth. Overall, Hartford Insurance Group's strong financial performance, strategic investments, and attractive valuation have contributed to its increased stock price over the past year. The primary drivers of revenue growth or decline for a company can be identified through an analysis of its financial summary. In this case, the overall revenue growth is driven by three key factors: net investment income, earned premiums, and fee income and other revenue. On the other hand, revenue decline is primarily caused by inadequate pricing of insurance policies, changes in assets under management, AUM, and a decrease in premiums earned due to reduced policy sales or cancellations. Segment-specific drivers also play a significant role, with improved underwriting performance and strong profitability contributing to growth in certain segments. In addition, other factors such as liquidity requirements, derivative commitments, and share repurchases can impact revenue growth, although these are not directly related to the company's core business operations. Overall, understanding these drivers is crucial for making informed decisions about investments or strategic partnerships. Net income and profit margins see significant improvement. The financial performance of a company has shown substantial growth in recent quarters. Net income increased by 41% in Q3 2025 compared to Q3 2024, with a notable rise of $313 or 41% in the same period. Year-to-date YTD net income also saw a significant increase of 20%. The 9-month net income rose by $447 million or 19.7%. Profit margins have also improved significantly, with the net profit margin increasing from 11.3% in 2024 to 15% in 2025. This is evident in both Q3 and YTD periods, where the net income available to common stockholders as a percentage of total revenues saw an increase. The growth in revenue, particularly earned premiums, which increased by $1,131 or 7%, has contributed to this improvement. Overall, these results indicate a strong financial performance for the company, with net income and profit margins showing significant gains compared to the previous year. The company is indeed generating positive operating cash flow, as evident from the financial summary and various pages of the report. The net cash provided by operating activities has consistently increased over the years, with a notable jump in 2025 to $4,114 million compared to $4,035 million in 2024. This indicates that the company is generating sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. The company's debt level and interest expenses have undergone some changes over the past year. While long-term debt has remained relatively stable, senior notes have increased by $335. However, total debt has decreased by 0.2%. In terms of interest expenses, there is a slight increase from $49 million in 2024 to $50 million in 2025. Notably, total interest expense has decreased significantly, down from $13 in 2024 to -$24 in 2025. The company's financial performance reveals a mixed picture across its various segments and regions. On the positive side, business insurance, personal insurance, and employee benefits all experienced revenue growth, with increases of $373 million, $75 million, and $45 million respectively. The property and casualty (P&C) insurance segment also performed well, receiving $1.1 billion in net dividends from subsidiaries. However, Hartford Funds was a notable underperformer, experiencing a decline in revenue by $24 million. Despite these mixed results, the overall trend suggests that the company's core insurance business is driving growth and profitability. Management is optimistic about the company's outlook, citing a 41% increase in net income available to common stockholders. This growth is driven by higher underwriting gains and net investment income. However, management also acknowledges challenges such as increased expense ratios and uncertainty over claim payment patterns. To mitigate risks, the company has established financial risk limits and employs various strategies, including hedging with derivatives. Management's investment strategy involves selling lower-yielding securities to fund purchases of higher-yielding investments, which has led to net gains in equity securities despite taking impairments on certain assets. Overall, management is focused on managing risks while pursuing growth opportunities. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company declared dividends on common stock totaling $581 million in 2025 and $555 million in 2024. Additionally, it paid dividends on preferred stock amounting to $16 million in 2024. In terms of share buybacks, the company has made significant purchases, with a total cost of $5,411 million in 2025 and $3,822 million in 2024. The net change to U.S. statutory capital was positive $831 in 2025, indicating an increase in shareholder equity due to share buybacks. That concludes the financial summary for Hartford Insurance Group Inc. Feel free to comment below, and I will be happy to answer them when possible.